On the political economy continues on this special day, Monday, July 13th, 2020. You're on to the Economy and Politics show, where the nexus between politics and economy continues to come to the fore. Let us give you a lineup of what we will be looking at today. Nigeria's economic indicators, FSDH analysis on COVID-19 impact on the Nigerian economy, the LIRS new palliatives for Lagos taxpayers, decline in foreign inflows to persist in Nigeria according to commercial partners, and the big one, the federal government handover of the National Theatre to the Central Bank of Nigeria and Bankers Committee. And let's get on to our conversation and analysis for today. First, we take a look at the FSDH report analysis, minimizing the impacts of COVID-19, the new unexpected shock to the Nigerian economy. But before we go on, let's look at the economic indicators for today. Our gross domestic product is currently 1.87%. That was the National Bureau of Statistics report for first quarter 2020. Inflation is currently 12.4%. Our foreign reserve is $36.13 billion. Our total public debt is 26.21 trillion naira. In terms of capital importation, it's currently $3.8 billion. Foreign direct investment inflow is $200 million. Unemployment remains 23.1%, while our misery index is 55.3%. Let's get on to the FSDH report analysis and looking at the COVID-19 impact on the economy. First, the global economic outlook from FSDH shows that in June, the International Monetary Fund revised its projection downwards and forecasted a minus 4.9% contraction in global GDP from minus 3% projected in April. According to it, advanced economies led by the United States and the Euro area are expected to lead the decline in global economic growth. The global economy is expected to recover significantly by 5.4% in 2021, although this is lower than 5.8% that was previously anticipated. Growth in sub-Saharan Africa for 2020 was further revised downwards from minus 1.6% to minus 3.2% due to the effects of lockdowns on economies in the region. Major oil-producing countries such as Nigeria and Angola have been badly hit by the pandemic. Nigeria's growth forecast for 2020 was revised to minus 5.4% from minus 3.4%. South Africa, which is the second largest economy in Africa, will experience significant decline of minus 8% in 2020, mainly due to restrictions imposed on the economy. Non-resource intensive countries showed better resilience led by Ethiopia and Uganda. The economies of both countries will expand by 3.2% and 3.5% respectively. Sub-Saharan Africa is expected to recover in 2021 with a growth of 3.4%. In 2021, the economies of Nigeria and South Africa will expand by 2.6% and 3.4% respectively. According to the International Monetary Fund, economic outcomes across countries will largely depend on the following: the length of the pandemic and required lockdowns, displaced workers' ability to secure employment, possibly in different sectors, scaring from firm closures and unemployed workers exiting the workforce, global supply chain reconfigurations that affect productivity, the extent of cross-border spillovers from weaker external demand as well as funding shortfalls, eventual resolution of the current disconnect between asset valuations and prospects for economic activity. Looking at something of utmost importance to Nigeria, the foreign exchange inflows comes to bear. Following the outbreak of COVID-19, the forex inflows into the import and export window reduced significantly in 2020 second quarter on the back of lower foreign portfolio inflows. FPI inflows declined to $27.2 million in June 2020 from $2.04 billion in January 2020. On a quarterly basis, inflows declined from $3.65 billion in 2020 first quarter to $225.7 million in 2020 second quarter. The Central Bank of Nigeria intervention increased from $290 million in January 2020 to $2.48 billion and $2.89 billion in February and March, respectively. The attendant effects of COVID-19 on oil price constrained the CBN's capacity to intervene further as dollar inflow dwindled in April. Following the lockdown and restriction of economic activities in April and May, total inflows to the import and export window dropped from $3.7 billion in March to $459.2 million in April, $492 million also in May 2020. FX inflows dipped further to $248 million in June 2020. First quarter 2020 had $11.92 billion as against second quarter 2020 of $1.2 billion. In early July, the CBN adjusted its exchange rate in the Secondary Market Intervention Sales, SMIS, a window where importers assess foreign currencies, from 360 naira to a dollar to 380 naira per dollar. Those are insights from the FSDH on the impact of COVID-19 on the economy. Interestingly, for Lagos, Nigeria's economic capital, some additional relief measures. The Lagos State Internal Revenue Service, also known as LIRS, has issued a public notice and it communicated additional palliatives that the service is implementing to cushion the impact of COVID-19 pandemic on taxpayers resident in the state. So if you're a taxpayer in Lagos, this is interesting news for you to follow. The public notice follows its earlier COVID-19 palliative measures published in the Tax Alert number 3.7 of March 2020 and Tax Alert issue number 6.12 of June 2020. This is from KPMG Professional Services. The additional palliative measures to be implemented by the service are as follows. Approval of installment payment of outstanding liabilities on case-by-case basis to ease the cash flow challenges that taxpayers are currently facing. Waiver of penalty for late payment of pay-as-you-earn liabilities for March to May 2020. Waiver of penalties due for late filing of 2020 annual tax returns for May. Waiver of interest and penalty on additional tax liabilities arising from 2009 to 2015 tax audit exercise for taxpayers who commit to a structured payment plan that terminates by 31st December 2020. Grant of tax credit of 20% of cash and kind donations made by residents, individuals to Lagos State Government for COVID-19 management. The credits will be available to offset 2021 year of assessment tax liabilities and subject to a cap of 35% of tax due. That will incentivize more donations to the Lagos State Government. Increase in payment channels that are easier, simpler, and more convenient for taxpayers. That's a very good one because this has been the issues raised by tax consultants we featured on this show. Adoption of video conferencing as the default mode of conducting tax audit reconciliation committee meetings. Very interesting, being tech compliant, LIRS. In return, the LIRS urges taxpayers to reciprocate the gestures of the Lagos State Government by discharging their civic responsibilities as and when due. That's for all Lagosians residents that they should continue to discharge their duties as LIRS continues to play its role of palliatives. But here are the comments from KPMG Professional Services who published this, and this was carried on ProShare Nigeria. KPMG Professional Services commends the LIRS for these palliative measures, which will further ease the impact of COVID-19 on taxpayers resident in the state. The tax credit granted by the state government for donors to COVID-19 management is remarkable, as the benefit is much more than what they would have clawed back if the palliative was limited to a mere tax deduction. This will hopefully encourage more taxpayers in a position to donate to the government to do so, like I said earlier. Hopefully, it will also influence other state governments to consider a similar intervention in addition to other palliative measures that they might have given their resident taxpayers. The waiver of interest and penalty on additional tax liabilities arising from 2009 to 2015 tax audit for taxpayers who can pay up by 31st December 2020 is a significant incentive for affected taxpayers to regularize their position with the LIRS. And on record, so far, what we can say is that Lagos State now and Akwa Ibom State are two states that so far come out with palliative measures for taxpayers across the country. We'll continue to update this and get the facts from across states of those governments that are giving tax reliefs to their citizens. A major discussion point has been of immense concern since the COVID-19 pandemic and oil price shock hit the global economy and has affected Nigeria has been the issue of foreign inflows. And from commercial partners, the reports published on ProShare shows that there's been a decline in foreign inflows and it's going to persist. That persistence is a big challenge for us. But let's begin with the macroeconomic view they have. For commercial partners, a second wave may be on the horizon. We're seeing those tendencies from the US, China, and even European countries. US-Sino trade relations will be back in the headlines, and Sino stands for China. Of course, US-China was described as the major risk to watch out for before coronavirus overtook everything. The US-China trade relations comes again to the front burner, and we'll be watching how that will impact the global economy. Inflation continues its relentless climb. Currently, inflation is 12.4% and will definitely be on the uptrend. For the financial markets, bullish momentum sustained in the fixed income markets. Interesting, that bullish momentum. Then the activity in the import and export window will remain muted. Not so good for those foreign investors. Anticlimactic end to an impressive quarter in the equities markets. Let's look for the expectations of commercial for the coming months, and that should even cover for the second half of the year on the economic scale. And this concerns Nigeria. Oil production is expected to decline as Nigeria adheres to OPEC plus quota. It looks at a decline in foreign inflows that will persist. The equities market will be under immense pressure. We had an analyst, Luko Fojebe from WebTV, that said we'll see massive sell-offs. No significant improvements for the Purchasers Managers Index in sight. That has to do with manufacturing, and it's not too good from the analysis for Nigeria's manufacturing sector. Looking at the equities, oil, and the US-China relationship, what are the key issues that commercial is looking at? According to commercial, the fallout of the coronavirus pandemic was felt all through the second quarter of 2020. There was hope that while the impact of the virus would be felt strongly in the second quarter, reported cases and deaths would begin to subside and the world would slowly reopen. The world did start to reopen as some cities lifted some lockdown restrictions, and certain places, New Zealand in particular, declared victory over the virus. However, towards the end of the quarter, due to some social unrest and other factors, a second wave of the virus appeared to be taking hold. Looking at the US, unemployment spiked to a high of 14.7% in April, before settling at 13.3% in May. Payrolls are nearly 20 million below their pre-COVID-19 level. At the Fed, the Fed Reserve Bank FOMC meeting, the Fed voted to keep benchmark short-term rates near zero. In addition, the Fed is continuing its bond buying program to the tune of $80 billion a month in treasuries and $40 billion in mortgage-backed securities. Along with rate decision, the U.S. central bankers projected that the economy will shrink by 6.5% in 2020, with 2021 expected to show a gain of 54 and 3.5% in 2022. The National Bureau of Economic Research, the body responsible for officially dating economic expansions and contractions, declared that a recession started in February, bringing an end to a decade-long economic expansion for US. Going further, it says in the UK, the Bank of England voted to pump an additional $125 billion into the UK economy, though it will slow the pace at which it will inject the money. The BOE's move to slow down the rate of quantitative easing means that it will no longer be able to soak up all the additional debt created by the UK government. The private sector will be required to finance the fiscal deficit. The bank's Monetary Policy Committee also voted to keep interest rates at the historic low of 0.1%. The US-China trade relations will be back into the headlines, and in this quarter, the relationship appears to be soaring, even as the Phase 1 deal barely hangs in the balance. US President Donald Trump said he opposed renegotiating the US-China Phase 1 trade deal after a Chinese state-run newspaper reported some government advisors in Beijing were urging fresh talks and possibly invalidating the agreement. Under the Phase 1 deal signed in January 2020, Beijing pledged to buy at least $200 billion in additional US goods and services over 2 years, while Washington agreed to roll back tariffs in stages on the Chinese goods. On the macroeconomic scale and the oil production scale for commercial partners, as at print time, OPEC has no information regarding Nigeria's output from direct source in the month of May. Currently, the sources showed that Nigeria's output reduced by 185,000 barrels per day to 1.592 million barrels per day production. However, the coalition of OPEC members and non-OPEC members, known as OPEC Plus, agreed to extend its 9.7 million barrels per day supply cuts by an additional month, bringing the total length of cuts to 4 months. It was revealed during the meeting coalition that Saudi Arabia will no longer take on the additional 1 million barrels per day cut it had initially voluntarily taken on to stabilize the market and will stick to its scheduled production quota instead. Wondering what happened to Saudi Arabia. It was also revealed that Nigeria and Iraq were to accelerate their production cuts to comply with the goal of taking out 9.7 million barrels per day from the oil markets. Nigeria's scheduled production output is 1.4 million barrels per day. Following the dramatic 56% drop in the last month of the quarter, oil prices struggled to find its feet as OPEC tried to bring stability to the markets. For most of the quarter, the price of Brent futures failed to break above $40 a barrel until the tail end of the quarter. Over the course of the reporting, the period, Brent futures gained 66%. Additionally, in a move that appears to be a bid to address the revenue situation that plagues the country as a result of the pandemic, the country has launched its first licensing round for marginal oil fields in nearly 20 years. That's an interesting story. The marginal fields are smaller oil blocks that are typically developed by indigenous companies, about 57 of them. Inflation remains a major issue of concern, and Commercial says it has maintained its upward trend in May for the 9th consecutive month as food prices continue to climb. The headline number was up by 6 basis points to 12.4% year-on-year from 12.34% in April. The uptick was largely due to the increase in core inflation, which increased by 14 basis points to 10.12% from 9.98% in April. While food inflation grew by 1 basis point to 15.04% in May 2020 from 15.03% in April 2020. On a month-on-month basis, the headline index was up by 1.17%, 15 basis points higher than April's rate of 1.02%. The marginal increases in inflationary pressures was due to the double whammy of the continued border closure and the lean food season. The general increase in prices due to the depreciation of the naira and the limited movement of goods due to the ban on interstate movements, and the increase in prices of pharmaceutical products and other health and lifestyle products as people become more health conscious on the back of an increase in the number of COVID-19 cases and fears of a potential second wave globally. For the capital imports and foreign exchange, total foreign capital inflows into the Nigerian economy through the I and EFX window sustained its downward trajectory in the month of June 2020 as foreign investors remained on the sidelines due to the COVID-19 pandemic. Commercial states that foreign inflows from other sources apart from FPIs declined by 4.6% in May from $63.3 million to $60.4 million. Similarly, FPIs, which is the common gauge of foreign investor sentiment, declined by 71.1% by the end of the month to $38 million. Despite the significant drop in inflows into the country, CBN intervention as measured by the quantum of its inflows remains largely subdued for the third consecutive month. Total foreign capital inflow through the window therefore declined by 22% from $492 million to $393 million. The 30-day moving average of Nigeria's foreign exchange reserves declined in June 2020 after recovering the previous month on the back of the IMF's $3.4 billion inflow coupled with improvements in oil prices. The external reserves declined by 1.1% to $36.2 billion from $36.6 billion. For the manufacturing purchasing managers indices, in the month of June, stood by 41.1 index points, still below even the average score of 50, indicating a contraction in the manufacturing sector for the second consecutive month after previously recording an expansion for 36 consecutive months. Of the 14 surveyed subsectors, only 5 subsectors recorded or reported growth, while the remaining 9 subsectors reported declines. The composite PMI for the non-manufacturing sector stood at 35.7 points in June 2020, indicating a contraction for a third consecutive month. Notably, a month-on-month analysis of the movement in the sub-indices indicated that non-manufacturing economic activities mildly improved in June 2020 as it improved from 25.3 index points in May 2020 to 35.7 index points in June 2020. Although all the 17 subsectors surveyed recorded declines, this was amid marginal improvement in economic activities within all the 17 subsectors that constitute the non-manufacturing index. Interesting insights from commercial partners. We go on a short break, and when we return, we'll give you an interesting story that you would want to really listen to. I mean, exciting times ahead for Nigeria's creative industry.
I want us to know that economic transformation, as I describe it, is not necessarily the same thing as diversification of the economy. Now, this is a phrase we have heard for the past 40 years. So, diversification of the economy is an essential component of economic transformation. But what is the nature of the diversification? That's the issue. If the diversification is coming from the production, if it's coming from the production of complex goods and services with value added in them, then you're diversifying in the right direction. But if you're diversifying away from oil, and say you're diversifying into exporting raw solid minerals, or you're diversifying into exporting yam tubers, or you are diversifying into exporting raw cashew nuts, that does not meet the enlightened, educated understanding of diversification in economics. Let's be clear. Economic transformation is a different order of things. It is a process that is built on the back of strategic thinking and disciplined execution, such as has been achieved by China and several East Asian economies. Economic transformation is purposed, and it will always, if it is successful, lift millions of people from poverty into the middle class. One of the reasons we have failed to achieve high-quality economic growth in this country is because Nigeria's economy is managed mostly on an ad hoc, reactive basis.
Welcome back. That was Professor Kingsley Moghalu, former Deputy Governor of the Central Bank of Nigeria, and of course he was a presidential candidate in the 2019 general elections, speaking on economic transformation. One interesting takeaway from that short insight at a recent discussion where he was the keynote speaker is that Nigeria's economic transformation has to bring value addition, and also there's a need for our economic management process to bring strategic thinking and discipline in execution. So imagine where we have those two applied. We experience remarkable high-level growth because we have so many robust, beautiful plans and strategies, but the input of strategic thinking and the input of discipline in execution has been the bane of our socioeconomic transformation. And we hope that the Economic Sustainability Plan and the new expanded economic development agenda will have these two into thoughts and lift millions of people from poverty. Very important for Nigeria. Now let's move on to the interesting story I talked about. The federal government has announced the official handover of the National Arts Theatre Complex at Igomu, Lagos. You know the National Arts Theatre, that's Nigeria's creative hub, to the Central Bank of Nigeria and the banks under the aegis of the Bankers Committee in order to commence the renovation of the facility. This was contained in a social media tweet post by presidential aide to His Excellency President Muhammadu Buhari, Mr. Tolu Ogunlesi, and this was yesterday. The federal government announced the official handover of the National Arts Theatre Complex at Igomu, and this was through the partnership of the Central Bank and the Bankers Committee. This will be now an opportunity for proper renovation of the facility, and this will help to transform the whole facility. This event occurred yesterday, and it had in attendance the Minister for Information and Culture, Alhaji Lai Mohammed, and the Lagos State Governor, Mr. Babajide Sanwo-Olu, and also the CBN Governor, Mr. Godwin Emefiele, said the bankers were targeting 1 million jobs from this project in the next 5 years. I know some people reacted to this on social media, like, really? But of course, it's very important to take note of that ambitious goal of 1 million jobs. You know what the creative industry has done over the years. Without government intervention, from music to film to fashion to arts, designs, we've done a lot and put Nigeria on the global pedestal. This is the central point of our creative industry, unlocking opportunities and potentials. We even got wind of the fact that that was where the great Stevie Wonder received his Grammy Award. Wow, interesting. So with the National Arts Theatre now handed over to the Central Bank of Nigeria and the Bankers Committee, we expect to see that this will completely transform the entire facility there in Igomu. Don't forget, historically, in 1977, that was a facility that was utilized for the Festival of Arts and Culture 1977 under the administration of President Olusegun Obasanjo, who hosted Africa and the whole cultural and arts activities. According to Mr. Godwin Emefiele, Central Bank Governor, the handover of the facility to the committee was timely, considering the external headwinds facing the country's economy at the moment. He said that the renovation of the facility, which will be completed in 18 months, would have transformed the facility into Nigeria's Creative Industrial Center. Yes, I like that word, Creative Industrial Center. According to the CBN boss, the National Arts Theatre Center will be comparable to other world-class entertainment and convention centers in any part of the world. I'm looking forward to that. He said activities in the center, which will include music, movies, fashion, and ICT, could be a very important source of growth and reduce the dependence on revenues from crude oil. He pointed out that the creative industry has the potential to generate over $20 billion annually for Nigeria with its human capital resources and an enabling environment that will harness the creative talents of our youths. In the course of the Economy and Politics Show, we've had Mr. Obi Asika, who is a very renowned and notable creative industry expert in the country, who has contributed immensely to nurturing and developing the music industry and creative arts, and of course, the social media space. He talked about how important this renovation can be to the industry. Same with Mr. Tunyota Akpobome, also known as Alibaba, the ace comedian who chaired the committee on the creative industry and has worked out the reports back to the Minister, Alhaji Lai Mohammed, for Information and Culture and Tourism, to look at how the creative industry can unlock its potentials and deepen its base, particularly navigating the COVID-19 pandemic. It's also going to be a benefit to Lagos State because Lagos State is home to National Arts Theatre. And so we expect that in the next 18 months, Igomu and all those adjoining facilities around National Arts Theatre will come alive. So we can say that we will be at a comparable level with international event centers, creative arts centers like what we have in the O2 Arena in the UK and Dubai and across Germany, France, and even in the US. So let's watch out for this creative industry hub coming alive again in National Arts Theatre. And of course, to all the layers of the creative industry, from music, movie, comedy, fashion, all parts of it, it's a new opportunity to leverage on this and begin to showcase how deep and strategic the creative industry can be to economic diversification. When I'm talking of diversification, we are looking at revenue, and this is very important for our nation. So, commendable efforts. Finally, this Arts Theatre has been handed over, and so the ball is now in the court of the Central Bank of Nigeria and the Bankers Committee to take it up, renovate it, and bring it to world-class stage. Wow, and that will be a wrap for the Economy and Politics Show for this Monday. beginning the new week. We want you to send your comments and views to news@proshenji.com. If you have views and things you'd like to share, send it to that email, news@proshenji.com. Join our website, www.proshenji.com, to watch our videos, read our news reports and analysis. Don't forget, by 10 a.m., we have the market review, giving you insights into what's happening in the financial and capital market as it relates to economy. Till we come your way again, whatever political economic debates and conversations you engage in, make sure it is constructive and productive. Thank you for watching. Have a nice time and stay safe.